Hey everyone, welcome back. It's been a while. My name is Kai Jun and I have my friends here, Gladis and Paul, and we'll be doing a little sharing about C Limited itself. And we'll talk a bit more as to why we have chosen this company and what have actually attracted us, like, in a sense. So without further ado, let's begin. C Limited itself is a Singapore company and a Singapore now company. It's founded back in 2009 and recently listed in New York Stock Exchange in 2017. Their current market cap is actually approx 136 billion. And we do see a significant growth as compared to S&P 500 in the past years. So one of the few, I would say, key driver for the rise in terms of their share price would be possibly due to the revenue growth, and we'll talk about it in a bit as well. So we will be covering on the contributing factor in a bit. So next thing, with regards to a little background with regards to what C is all doing and what they're all about is that C operates across three different business segments itself. So at this current juncture, there's no other companies in Southeast Asia with similar business structure in a sense. And this actually, I would say, position themselves to be the market leader in the currently, like in this case. So the other thing to take note of is that they are not a Chinese company. So as compared to Chinese company in the listed in the US, they do not receive any form of grilling from the United States itself. So regards to the growth trilogy story, I actually got this inspiration from after watching the Batman: The Dark Knight. I actually identified mainly three factors, that could actually contribute to the potential growth for C itself. So the first one would be environmental. As regards to environment itself, e-commerce and digital financial services are actually in the sunrise industry. And given the pandemic situation, they actually have a positive impact, actually increasing the adoption rate for the respective business itself. So the second will be a tech availability, such as big data, AI, cloud computing, in a current period whereby it's more, I would say, more readily available as compared to back then in 2002, whereby .com bust happened. So they have actually C Limited has actually invested into user data mining as well as analysis across their different businesses to better understand and cater the needs to their consumer itself after studying their patterns. So the last but not least is the strong corporate governance. People, with amazing experience to actually lead and groom new individuals, new talents to actually bring C to the next height, next level. So right now, I just pass my time over to Paul to talk a bit more about the business model and the revenue segment.
Okay, thank you, Kai Jun. So right now, I'll be covering on Garna's business model first. And Garna was initially named was initially created with this name for the business of gaming. And this is the intention of connecting gamers across Southeast Asia to tackle the language barrier. And as of now, we can see that there has been a huge growth from since then up to today. And because their operations expanded to include digital financial services and e-commerce, the company was renamed to C Limited in an effort to be more inclusive of all of their businesses. So Garna mainly publish games developed by third-party developers on their platform, but they do actually have their own self-developed games as well, with one of them that is worth mentioning, Free Fire. This game Free Fire was launched in the third quarter of 2017, and right now it has been a huge success, achieving a record high of over 100 million peak daily active users back in the second quarter of 2020. So due to their popularity, they have attained a ranking of being the fifth most downloaded app on Google Play. For Garna's business model, they follow a freemium model where users can play the games published on the platform for free, but for items in the game, they have to pay to purchase it, such as items like skins as well as in-game accessories. So Garna, they leverage from third-party game developers. They outsource their revenue from them. Next, as I will touch on Shopee's business model and their revenue segment, they started in 2015, operating in 7 markets, and they have shown significant growth despite the strong competition in Southeast Asia. So, factoring the cost of the pandemic recently, Shopee still managed to rank as the top e-commerce platform with an increase in their adoption rate. as everyone has to avoid going out as much as possible during lockdowns as well as circuit breaker. So because of this period, e-commerce managed to outperform in their businesses. So as for their revenue segment, Shopee has two different revenue segments where they earn from. Namely, first is the marketplace revenue, where they earn from advertising fees, sellers commission, where they profit for about 2% upon each successful transaction, as well as their value-added services such as Shopee Feed, Shopee Mall, Shopee Live, etc., whatever that attracts the consumers. So next is their product revenue. Their other source of income comes from here, which is a representation of their revenue coming from the B2C transactions. Moving on, I'll be touching on the breakdown of their business revenue by segment. So it can be seen that C's digital entertainment arm has generated a major portion of their revenue, and this is attributable to their self-developed game Free Fire, as mentioned, which hit a new record number of monthly paying users in the second quarter of 2020. This actually more than doubled year on year. So there's a correlation between the number of active users as well as the paying users. Their idea is to garner as many active users as possible, which then will increase the number of paying users. As for Shopee, they have surpassed Lazada in terms of downloads and revenues as well. So they integrated C Money, their financial service arm, as part of their payment services on their platform. This actually helps them to level out the playing field between C Limited and other e-commerce platforms such as Lazada and Alibaba with their Alipay. So according to App Annie, is what we have researched on, in the fourth quarter of 2020, Shopee actually came in as the top ranking app on App Store and Play Store, and they garnered the most number of monthly web visits. Moving on next, I will pass the time to Gladys, who will be talking about the competitive edge.
Yeah, thank you, Paul. So now I'll bring you guys through why C has a competitive advantage over the others competitors in their respective country. So we'll be moving in a clockwise direction. So firstly, we need to understand that C itself does not have a direct competitor due to their unique business structure. They mainly operates in three different functions, which is namely their gaming, e-commerce, as well as their recent digital banking service. With their current market size, it actually allows them for dominance in the Southeast Asian market, which allows them to capture their target audience across the industries that they are providing in. Furthermore, with their strong presence in these countries, it actually allows them to adopt this aggressive approach because of their low competition, as well as being able to innovate products effectively through their aggressive marketing strategies. For example, we have Shopee. There's been ongoing in the late last year where the pandemic was on. They have a lot of new functions where allowing different sellers to use their features such as the Shopee Live to sell products, as well as collaborations with brands through AI and AR powered tools. So lastly, I'll touch on inclusivity, which is the ability to provide a platform for their target audience to connect through various initiatives through Southeast Asian country by hosting various workshops, as well as partnerships with workforces to create job opportunities in our current circumstance. Yep, next please. So next, I'd like to touch on some key financial highlights. So here we have ROE, GP margin, as well as NP margin. So with how the company is actually functioning right now, as well as the approach that they are adopting, there has been a healthy increase in their GP and NP margin. So I'd like you guys to look at the ROE, which has a relatively significant improvement since 2019, from a negative 83% to a forecasted of negative 5% in year 2021. So despite C company itself to be heavily reliant on debt, right, we can actually say that C has been successful in translating their use of debt into their fruits of labor because of their ROE improvements, which is relatively impressive. Yeah. So next, I'd like to pass on to Kai Jun.
Thanks, Gladys. Okay, regards to C Limited, I'll touch a little bit more on their key performance metrics and why I do strongly believe in terms of their growth outlook is that in the past periods, as of 2016 to 2019, the active user has actually seen a CAGR of 88.3%. As for the paying users, we do in the same period, we do see a CAGR of 77.33%. And this actually translates to about 11% retention rate as of Q3 2020 itself. Other key performance metrics regards to the e-commerce itself, we do see quarterly growth rate for the gross merchandise volume as well as the orders at approx about 27% itself on a quarter-to-quarter basis. So given the closures of essential stores, distancing measurement, as well as limited products in the physical store itself, as what Paul has shared, it's actually increased the adoption rate for e-commerce itself. Additionally, something indirect causation, we take Singapore as an sample example, that for the top 3 reasons as to why Singaporeans use mobile phone during their physical shopping experience is actually firstly to compare price, second for reviews, lastly is to find alternative deals or better deals in other words online. And this actually often leads to customers actually purchasing the goods online in the end. So as far as what we have talked about regards to Trilogy, corporate governance is one of the key, I would say, one of the key factor to actually facilitate the growth. And we do see that 5 of these amazing gentlemen do have the network and the experience to actually, I would say, groom the new people, the new management, the new employees to actually, I would say, innovate and bring C to the next level. So regards to market size and industry growth, I'll pass my time over to Paul to talk a little bit more.
Okay, thank you. So right now, let's go into a deeper dive into the market size of the games industry first. Right now, from what we can see over here, APAC is actually the largest revenue contributor to the games market as of 2020, covering about 48% of the revenue in the market. And looking ahead in the upcoming years, it is forecasted that the global video games revenue growth rate will accumulate an increase of up to about 10.2%. Next, as for the e-commerce industry, its current market value stands at around 62 billion as of 2020, and it is forecasted to grow by another 177% to around 172 billion in the coming 5 years ahead. So taking a look at the digital financial service industry, due to the recent approval of full digital banking license, as we may have seen from the news by MAS, consumers will be enticed as financing can be offered at a more satisfactory rate. And this will provide them with an incentive to come aboard, thereby boosting the revenue growth. So out of around 400 million adults in Southeast Asia, there's about 104 million who are fully banked, 98 million who are underbanked, and 198 million that are still remained as unbanked. So this actually provides a huge opportunity for digital financial service operators and banks who are willing to go digital. Next, I will pass the time to Kai Jun, who will touch on the risk.
Okay, so for the risk itself, we have take into multiple considerations. So the first one will be SWOT analysis, whereby we do take into consider that C is actually mainly operating into diversified, diversified business across the sunrise industry as per mentioned. And as we understand, sunrise industry is mainly emerging markets, this actually translate to the lack of infrastructure available, which also means that C have to incur additional costs, which could reduce or say affect the profitability. Last but not least, we'll take account in terms of the low barrier of entry, given substitution availability in the respective business they're operating in. So moving on, the 4 key actually risks that we've actually mainly identified is consumer expenditure, given that C is a consumer-based reliant. Second would be the data security. They are tech-reliant company. Their platforms, the consumer data and stuff like that are very important. And in order to continue to gain consumer confidence, they do have to monitor this very closely. Third would be the barrier of entry. Like I mentioned, the substitute within the respective business, such as Blizzard for Garena itself, Lazada for e-commerce against Shopee. last but not least, the credit risk. They are still not profitable and still have to, and still debt reliant. Therefore, this is something that they have to actually watch closely in terms of their financial aspect. Feel free to take a pause and have a read regards to PESTA evaluation. Yep. Moving on, I'll be talking about the volatility of the currency. They are actually operating mainly in Southeast Asia and actually indicated the respective currencies as well as the what's going on in the situation in the past year. And from here, we can actually identify if that's with regards to the volatility that's present. Consumer purchasing power is closely tied, has some form of relation regards to inflation as well as GDP growth in a sense. So post-pandemic, we do hope to see consumer confidence start to improve, which translates to consumer purchasing power in a sense. So now I'll pass my time to Gladys to further elaborate and share a bit more regards to valuation.
Yeah, thank you, Kai Jun. So for the valuation portion, we actually arrived at a value of 223.08, which was actually a 10.92 upside as of late last year. So basically, we place a different weightage in our DCF as well as the SOTP model, taking into account the industry growth in the near future as well. So this is a fair value that was derived earlier. So as of today, 9 Feb, C is actually valued at 263, which is beyond what we have actually valued. And we truly believe that there will be much more growth potential in this near future. Yeah. So Kai Jun, would you like to wrap up?
All right, thank you. So just to sum it all up about what we have actually what we have actually identified and what have we researched on is actually to conclude that post-pandemic situation is very likely that C will actually I would say continue to grow even I would say grow even larger at a more faster rate at an exponential growth in a sense. We do hopefully see that they'll be affected by the I would say the recovery of the GDP in a sense, and given a growth trilogy that is actually present, we're expected C to actually turn profitable by year 2022 and beyond. So adding on to what C is all about, their goal is the sense that they are trying to merge the three business together, their gaming segment, their e-commerce as well as their digital financial services. They are trying to merge all these three together to create a seamless ecosystem for the consumer to enhance the overall experience for themselves and the company itself. So this actually is positioning themselves for I would say for the near term growth and we do see a very very positive outlook about them. So last but not least, I think we would just like to thank you guys for the time for spending about 20 minutes or so to for us to share regards to C. If you have any question, feel free to leave in the comment section below. If not, if you are interested in current affairs or financial related topics, feel free to scan the QR code and that will bring you to our Telegram group chat whereby there will be people of similar interests there to talk about things. Yes. If not, have a great day. I'll enjoy my evening. Bye bye.